In case you missed my previous video where I talked about how to use the stochastic oscillator to day trade, you might want to check it out. Meanwhile, in this particular video, we're going to be talking about using the stochastic oscillator to scalp together with trend lines. Okay, so basically trend lines serve as dynamic support and resistance levels. So we are going to be combining the use of trend lines and stochastic oscillator to scalp the market, right? And we're going to be focusing on the 1 minute and the 5 minute time frame. So quickly, I'm going to show some trade opportunities on the 1 minute time frame, and we are going to run to the 5 minute time frame, and also I'm going to be showing you some opportunities there. I'm just going to be showing you how to use the strategy, this particular strategy, on the 1 minute and the 5 minute time frame, guys. So now remember that we are on the 1 minute time frame. So how do you scalp with the stochastic oscillator alongside trend lines? When you open your chart, just look for um, a bullish structure or a bearish structure. Now, the bullish structure, the bullish structure that I'm referring to is you would want to look for the formation of higher lows and higher highs. Now we can see that this is a low, this is a high, and this is a low that is higher than this previous low, and this is a high that is higher than this previous high. That's what we call higher highs and higher lows. Okay, let me just draw another trend line here. So we have higher highs and higher lows. So this is a bullish structure, right? Now, on the other hand, let us find a bearish structure. We can see a bearish structure here because we have lower highs and lower lows, right? Lower lows. These are lower lows. Okay, so this is a bearish structure and this is a bullish structure. Now, in order to combine the trend lines with the stochastic oscillator to find good trading opportunities on the 1 minute time frame, we are going to be using the confluence technique. Basically, confluence means when you have two signals from two different indicators, could be price action and an indicator, maybe like an indicator like stochastic oscillator. It could be two different indicators or whatever the case may be. Basically, once you have two signals from different indicators telling you the same thing, then we have a confluence. Okay, so now after the drawing of this trend line, let's remember, if you want to draw a trend line, you will have to look for 2 points, like for example here and here, where there was a price reversal. Okay, where there was a price reversal, then you join those 2 points together, and you know that forms a dynamic support or resistance. In this example, this is a dynamic support because we have 2 points here and the trend line. After drawing the trend line, we can see that later on, as price got to this trend line, it was rejected. So this was a dynamic support. Now this is a dynamic resistance. This was 2 points of reversal, two reversal points, and then we do a trend line joining those 2 points together, and then we can see that the next time that price got there is what it was rejected. So this was a dynamic resistance, right? Now in this situation, you can see the same thing, 2 points. We joined it with a trend line, and you can see later on when price got there, it was rejected. This is another example. We can see that this is a reversal point, is another reversal point, and we use the trend line to join both of them together. And now you can see that when price got there next, it was also rejected. So basically, that's how the trend line works, right? Now, using the trend line together with stochastic oscillator to scalp, okay? After the first and the second rejection, which you now use to draw a trend line, you will be looking out for um, the stochastic oscillator giving you a signal when next price gets to the trend line. So for example, let us say we had drawn this trend line after this two searches happened. We would have waited patiently for the next time that price will come to the trend line, and that would have been here. And then we would have looked at our stochastic oscillator, and we can see that stochastic oscillator is also saying that this is a buy signal, because we can see a bullish crossover here. We can see that the main line got to the oversold level, and then it went upwards and crossed the signal line. So we can see that this is a confluence that we have here. We can see that price got to the trend line, and the stochastic is also saying that this is a buy opportunity. So we will have entered a buy trade somewhere around here, because we had a confluence from both the trend line and the stochastic oscillator. So after entering a buy trade here, we would have perhaps set our stop loss just below that dynamic support level, below that swing low, because we can see that there is a support level here. That was the reason why this price was rejected. So we could have considered setting our stop loss below that level, right? And then as for our take profit, we would have considered using this dynamic resistance as our exit um signal, right? So as price got to this level, we would have considered exiting the trade. And you can see that we had another confluence signal here, because the same time that the price got towards the trend line resistance, we can see that the stochastic also got to the overbought level, and we had a crossover around the same time that the price got to the trend line resistance. So in this situation, we would have just exited our trade somewhere around here, and we would have ended up getting about it is not much. Remember, this is the 1 minute time frame, so we would have gotten just about 4 pips. But remember that scalping is just a way of trading in which you are trying to catch small price movements. Okay, so you would have taking a buy trade here, and perhaps taking a sell trade here, and then taking a buy trade here, and then just catching small price movements, right? So now let us look for another opportunity. We can see that this is a signal from the we can see a signal here from the stochastic oscillator saying that this is a buy opportunity. At the same time, we can see that the trend line is also saying this is a buy opportunity. But since we are going to be drawing this trend line after 2 points, then let us use the third point as our example, right? So after price touched the trend line, we can see that the stochastic oscillator also found itself within the oversold level, right? So our signal is going to be after the crossover from the stochastic oscillator, we will have just entered a buy trade. That would have been somewhere around here. And then as for our stop loss, like I said, you can set your stop loss just below the swing low, below that dynamic support level. And then for the exit signal, we would have waited for price to get towards the trend line resistance, which is around the same time that we see the stochastic oscillator entering the overbought region. And because of that, we would have just exited our trade somewhere around here. Okay, so we would have caught about 7 pips, right? We would have entered our trade around here after the stochastic gave us a signal, and the trend line also gave us a signal at the same time, and we would have exited the trade somewhere around here after the price got close to the trend line resistance, and the stochastic oscillator gave us an exit signal. Okay, that would have been a good point to exit the trade, right? Now this is the 1 minute time frame. Let us go to the 5 minutes time frame. Let us look for other opportunities on the 5 minutes time frame. Now we're going to start by drawing our trend line. These are the first point and the second point, right? And you can see this was the first point, this is the second point. Let me just adjust it a little, right? Okay, so now having drawn this trend line, we are now going to look for opportunities from the stochastic oscillator at the same time. Now, this was the first point, this was the second point. So the third point is what we are going to be looking out for. Remember that your trend line is drawn after 2 reversal points, okay? So it's at the third point that we will start looking for an entry opportunity. And now we can see that the stochastic oscillator gave us a buy signal just around the same time that the price of this asset, which is Euro USD, got to the trend line support. So we would have entered a buy trade here because we have a confluence the same time that the stochastic oscillator was crossing above the oversold region after the main signal crossed after the main line crossed the signal line. We can see that the same time the price of Euro USD was bouncing off the trend line support. So that would have been a good opportunity to enter a buy trade, and then we would have set our stop loss just below the trend line support, and then we would have been waiting for, let us draw the resistance trend line. Okay, so would have been waiting for price to get to the resistance trend line, which happened around here, or that could be your first exit signal. Either you wait for the price to get to the trend line resistance, or you can just decide to exit after the stochastic oscillator gives a sell signal, which is price getting to the overbought region and the oscillator crossing over downwards. So those who would have decided to exit after the signal from the stochastic oscillator, perhaps they would have exited somewhere around here, which was the first time that the bearish crossover happened. So if you had entered around here and exited around here, it means that you would have caught just about 5 pips. Then some other traders might have waited for a second um, bearish signal just for certainty. Some traders might have waited for a second signal just for certainty, and if you had done that, you would have caught about 7 pips. However, any trader that decided to wait for the price to get to the trend line resistance will have exited somewhere around here and would have caught about 16 pips. Okay, so basically this is it for trading with the stochastic oscillator and trend lines. It is a scalping strategy. This particular strategy is a scalping strategy in which you use the stochastic oscillator and trend lines to get confirmation. So you will be looking out for signals from both the trend line and the stochastic oscillator on either the 1 minute time frame or the 5 minutes time frame in order to scalp successfully. So that's all for this particular video. I hope you enjoyed the video. Please don't forget to like, subscribe, and hit the notification button so that you would get updated on the next videos that I post. So cheers guys and happy trading.